Dear TFLOW holders, welcome to this special show. Today we have a guest, an honored guest. Borys Pikalov is here with us. He's the head of business analytics and co-founder in STOBOX, one of the few companies globally, from my point of view, that knows how to tokenize projects. And I think that you are the top experts in tokenization. And Boris, thank you very much for joining us today.
Thank you, John, for the invitation and for the kind words.
It's not kind words, it's a result of your excellent professional work, because when I made my research to find a tokenization partner, I quickly discovered your page and your YouTube videos where you describe in detail how a project can be tokenized and how tokenization works. And you know, especially in this era that we are going through in crypto, it's really important to be able to separate the real companies and the real services from just market news and just fumes, let's call it, because a lot of companies and a lot of people talk about tokenization and how it can be the future of the economy, but they don't know how to do it. And when someone really asks to tokenize a project, there are a mountain of legal problems and no one can do anything. So this is why in TFLOW we were really happy to announce our strategic partnership, that you are our partners in tokenizing projects. And please share with us your history in crypto, how you got engaged in all this, how crypto became your profession, and then let's take it step by step to discuss about tokenization. But let's make a brief introduction so our audience can get to know you better.
I'm glad to work together as well. My journey in crypto is quite unconventional, I believe, compared to many other people. So actually, before starting to work in STOBOX, I worked in a completely different field. I've been a researcher working in theoretical physics, so much more abstract and much farther from the real applications. And what I found for myself is that I would experience higher degree of motivation working on one of the two, either something very abstract and highly theoretical, or something practical with actual implications for the world. So I've been thinking what would fulfill my ethical duty to the world into a higher degree, and I decided that it would be better to do something more practical, in particular working in startups. And by that point, I've been approximately 4 months thinking and considering different kinds of opportunities of what I can do. I've been considering joining startups or moving into management consulting to acquire some career capital, stuff like that. And at that time, I encountered Jean and Ross, other my co-founders who have been starting to work on STOBOX. I've been invited to participate in the team by a friend who has been working there at the time. And I've been surprised by the vast potential of the market and how significant the transformation can be that is created by tokenization on one hand, but also by the challenge of doing this transformation, because the legal, the technical, the operational, and many other challenges that have to be overcome are, the least to say, enormous to make tokenization happen. So this to see the possibility to test and grow skills by testing them again, these challenges on one hand, and the possibility to do a significant impact is what started me to work on tokenization. So I came there 3 years ago with basically zero background in finance and blockchain, which in some sense was the reason why we all started with a bit limited background, some higher, some lower, which on one hand made us move slower in the beginning than people who have been for 20 years in the finance industry. But on the other hand, it has been beneficial because we didn't have preconceptions regarding how the things should work, which means we could have been much more innovative than people who know how it works and who are much more close to new opportunities. This is, for example, why we've been one of the first tokenization providers to start speaking about the importance of permission DeFi, and why decentralized finance protocols, specifically automated market making protocols and lending protocols, are crucial for unlocking the true potential of tokenized securities, precisely because we've been here in the intersection of finance and crypto. This also has been one of the reasons why we've been very swift to adopt different innovations in tokenization industry in finance that have existed for decades. Because what you find is what we are doing and what many people in tokenization industry are doing is leveraging innovation that have existed in financial industry for a very long time. We're speaking about things like securitization or private placement or crowdfunding. It's not we who invented them, but they have been lying dormant and not really utilized for small and medium enterprises to the extent to which they are now. So really not having this background and preconception actually helped us to be more innovative and therefore deliver better service in the long term.
You didn't have any obstacles of the past and the previous financial models because as we know right now, blockchain and decentralized finance is disrupting the financial economy, the traditional economy. And of course, not having a prior experience in this will help you, a theoretical mind and a scientific mind like yours, will help you design new models around the tokenization and new ways about how actually the micro investors can become a major investor by combining their power and of course the flow of value to different projects, because by tokenizing a project, you can change the way that value comes into a project in the form of either it's a loan or it's a debt or someone investing in the project. So we go beyond crowdfunding, let's say, and beyond the traditional financial models. And this is something completely new, which has to be based on a really legit and secure protocol that is going to work and is going to channel this value to the right projects, because it is important not only to help the micro investors invest, but also secure that when they invest in something, it's something that it is secure, it is legit, it is stable, it is checked, so they don't invest in scams and don't be victims of any financial frauds, because we also know that in crypto, it's a very dangerous market. A lot of people find it very easy to create tokens, to tokenize anything, and try to sell this to the audience. So it is really important to go such an important process and have experts like you design and be able to really bridge legit projects and good companies, crypto companies, with good micro investors that can power these companies, because right now the only way for a company to grow is only to go to the banks and take a loan, and we all know how this goes most of the times.
Yes, you're correct. So the problem with traditional financial approaches is that they have been designed more for institutional investors and fundraising from institutional investors. So the market was going between different extremes, so to say. The initial stage of the market was extremely high regulation, which was necessary for institutional investors. And after this shift, it came not to the middle ground, but to a different extreme of unregulated ICOs, where it was purely for, or mainly for retail, for crowd investors on one hand, but also due to the complete lack of transparency and regulation, it actually went to the number of scams that significantly skyrocketed and was outstanding. I don't think that anywhere in the history we have seen such a high number of scam projects and people benefiting. So after that, market came a big back and settled on the middle ground. When you have on one hand still significant access for the community and for common investors like you and me, but on the other hand, you have a significant degree of regulation and investor protection that makes the risk of these projects not as high as it has been before. And it matters to make crowdfunding via crypto accessible for the majority of businesses, because super high risk can be justified only by an extremely high return. And when we're speaking about early stage disruptive technology startups, actually it can be a good bet to invest in multiple such startups, even if many of them end up being scams or unsuccessful. Given the high potential, even one or two relatively more successful ones will pay off the investment. However, this isn't true if we are speaking about making this fundraising tool available for the majority of businesses, for enterprises in industries like real estate, or like land, like natural resources, like manufacturing, like your local coffee shop, they cannot offer you 10x annual return as a standard crypto project. So you need to reduce the risk so that risk return ratio of that investment becomes feasible for the majority of investors, and specifically for investors who have lower risk appetite compared to sophisticated crypto investors. And regarding what you previously said regarding the fundraising about with loans, this is especially a problem for software companies. The reason for this is that software companies don't have a hard collateral. As a more brick and mortar, yes, as a brick and mortar business, you usually have, for example, a piece of property or a piece of equipment that you can use as a collateral against a loan. So the interest rate will be at least more or less decent and will allow you to survive. But we're speaking about software businesses who are the most innovative businesses out there. For them, such loans would be much more inaccessible due to the high degree of uncertainty, especially in early stages, and lack of any tangible assets that can be used as a collateral. And therefore, interest payment will create a significant drain on the cash that would otherwise have been available for growing the business. So only alternative for such businesses is going for venture capital funds. And this probably works for some businesses, but again, it creates certain problems in terms of the economics of venture capital funds, because in the current financial markets prior to tokenization, the investment in private corporations are highly illiquid, which means that you as a fund, you can exit and therefore profit only as far as a business is acquired or goes public. And for this to happen, the business has to grow extremely high. So again, you get and which leads to certain unsustainability in terms of how the business is financed. So in startup world, it's very popular to speak about the strategies of blitz scaling, of just buying out the entire market with huge capitals that you raise from VCs. And this strategy probably works for some companies, but it also creates significant degree of unsustainability, whereby you grow prior having the positive unit economy, positive contribution margin on the unit of goods on the customers that you sell, which leads to the company actually maybe not even being profitable in the long term and ending up to be a flop. The biggest example of this is obviously a Vivor, who has been flooded with capital, but actually ended up to lose the 90% of its valuation because of the shady financials. And this is not something that is outlier. It's actually inherent to how the venture capital work, because they need this unsustainable growth for their economics to work. And when you introduce tokenization, you change these economic incentives because you create liquidity in early stages, which enables you to profit even when the growth is much more sustainable. And it also creates, not only by enabling trading by the technical level, the most important factor in creating liquidity is the fact that you create access to the community. This is important because in order for trading to be possible, you need not only the technical possibility for trading, you need somebody to trade with, somebody to buy securities from you. And when you have like 10 funds invested in this space, there are not so many possible counterparties for a transaction. But when you have hundreds or thousands of investors who can buy the securities from you, even though these investors are smaller, you create much higher trading volume and therefore possibility for liquidity in early stages. So all the rigged economy of current venture capital becomes much more sustainable due to this access of common investors. So the reason why tokenization creates positive social consequences is not only because it benefits the investors and creates equal opportunity for rich and poor, but also because the corporate governance and incentive become much more sustainable.
It's, let's say, in two words, democratization of investing, actually, through this, because you give access to micro investors to be able to invest in such securities, which right now we don't have such an ability. You know, when you have a large company issue a bond, for example, not many investors can go out and buy this bond. So it's important through tokenization to offer first access to micro investors. And secondly, it's important that you give an exit point to the investors earlier, before the project reaches the final stage. This is important because you can sell your securities during the process of the project. the whole duration of the project, which is also very, very important. And this is one of the reasons we wanted so much to work with you, because we want to offer this opportunity to our investors in the TFLOW platform, where they will be able to invest in such securities, because we know that not only, as you correctly mentioned, in 2017, it was a phenomenon in crypto, where we had so many ICOs, unregulated ICOs, which 95% of these projects died, and it was really remarkable to see, because I lived in this era. I'm in crypto from 2008 actually, but invested and actually got involved in 2017, exactly when this era started. It was the summer of 2017, where you had companies that made an ICO about any project, any kind of business. For example, it was one company that digitalized documents for logistic companies, and they raised 7 million in 7 minutes. And this company doesn't exist right now, okay? But this proved that the audience and the micro investors were really eager to invest in this technology, and this is the good thing that got out of this. And of course, we know very well that crypto is an industry, and every industry has its positive and its clarity and very good projects, but also has a lot of scam projects. And we also should be very skeptical when we see communication and advertisement of initial coin offerings or IDOs or anything, especially initial coin offerings, because you have to check out the project. So by issuing a security, this is much more safer for the investors. And also, let's see the example of crypto banks. For example, the most known crypto bank, which now has 1 trillion in assets invested for just 10 to 13%, 12% annually, which a common micro investor who gets right now into crypto, but just hearing these stories from 2017 and 2018, they expect a 100 times their money, or a 20x, a 100x. Let's also share to our investors that they must have their feet in the ground, and expect that even a very good performance, or a 1x, a 2x, or 3x, it's a very good investment return in the traditional financial world. And if you went out and said, listen, that I can offer you a secure 8% per year, you will gather all the money of the world, of the largest investors in your platform, if you were able to do that.
Everything you're saying is very reasonable. So I have several points to comment on what you said. One is, you initially mentioned about the importance of providing possibility for exit before the end of the project, and there are many industries in which this is actually extremely critical for their growth. One of the most common examples, most severe examples, is green bonds and generally large infrastructure projects. So the problem with such projects is that the duration, they are usually financed through debt, and the duration of these bonds can often be 20 years or a similar timeline. And for the common investor, 20 years is an extremely long timeline to get your money back. Yes, so basically it means that this investment becomes feasible only for investment companies with very long planning horizon, like pension funds, for example. Notice that many investment companies even don't exist for 20 years. For example, you're raising your fund for 10 years. So there are a very limited number of companies who can invest in such bonds. And the problem thus becomes that that projects that really need finances, such as infrastructure in developing countries, especially green infrastructure, becomes underdeveloped and underfinanced because of the complexity of this investment. So the liquidity is really important in this regard. Although I would say that it doesn't mean that you need to provide instant liquidity. This is one of the problems that we see with utility tokens, that it takes time for the project to really deliver on the capital raised. You cannot build a solution overnight, or often in a month or two, especially in more brick and mortar industry. So for example, many of our clients who come from more traditional industries, they introduce a 1-year lockup before the sale of their security tokens is possible, because they need this time to really prove they can work. Example of such clients, one client of ours, for example, they are launching probably in the next few weeks. They are raising 13.5 million euros in order to build a holiday resort in France. and they would need time for this resort to be really built and to show investors how they utilize this money. So and they're introducing this lockup, so investors don't simply lose patience and sell. Or another example, farmland asset, they are also going live in probably either this week or next week. They are raising between $15 and $30 million to purchase agricultural land in the US, which is prime farmland in the world. But you cannot do something with the farmland earlier than a year, because you have this cycle of harvesting and crops. This is why such lockups are necessary in order for investors to help investors with being patient and waiting for projects to really come to the fruition. It can become easier with projects that have similar fundraising model. For example, one of our clients, Landshire, they are going to tokenize multiple small properties which deliver rental income. One of such properties is already tokenized and available for sale. So obviously, it's much faster to find tenants for an existing property. So they, for example, don't introduce such a lockup because they are able to pay rental incomes faster. So even though it's extremely beneficial to deliver returns faster, there is certain reasonable lockup depending on the business model of the project. And the second thing that I wanted to comment is, when you've been speaking about the importance of due diligence and risk, what you're saying is very correct. So the fact that such projects initially in 2017, 2018 had been able to raise capital almost instantly shows that how investors crave high return and possibility for more diverse and more diversified investment. But also, a very important thing to remember is that high risk, high returns always come with high risk. This is due to the economic theory called the efficient market theory, which basically tells that if something has high returns, then everybody starts doing this, and then one of two things happens: either the returns go down because of an increased competition, or only if you can win, and therefore the risk becomes very high. So you cannot have high risk, high returns without high risk due to this efficient market theory. So investors really need to be very careful. But what has been done by this introduction of higher space of investment opportunities, that investors can now choose from wider array of projects. They can choose high risk, high return projects. They can choose moderate risk, moderate return projects. They can do something that fits their investment profile and now do much more balanced portfolio, which wasn't possible even 5 years ago. So I guess actually competition between different projects will remove the amount of capital that goes into super high risk projects, because previously your choice was more limited. You had either super low risk projects with low returns, like investment in standard S&P 500, or bank deposits with like negative interest rates, or super risky RCOs. Now you have more options in the middle. And therefore many investors who wanted high returns but who are less risk tolerant can actually settle for these options like 15% annual returns. One of our clients, for example, they're going to offer tokens, bond-like tokens with 10% annual return and very low risk, because this is a real estate project. So this is the kind of investment opportunity that for majority investors who usually invest in bonds with 4 to 5% interest rates is actually a very good deal, even though it doesn't deliver like 5x on your capital. Because what you really want in the long term, and the reason why most people invest, or why most people should invest, is not really to become rich. Because if you want to become rich, you need to be professional in anything what you're doing. If you want to become rich by launching a startup, you need to be professional in business. If you want to become rich by investing and trading, you need to be professional in investing and trading. But you can invest even without being a professional. If your goal is not to become super rich, if it is simply to preserve your capital, then the requirement to your professionalism and the degree of due diligence that you can do are much lower. And you can settle, for example, with investing in project with moderate risk and moderate returns, which is in the long term the most beneficial strategy. Because the way in which most people become millionaires really is not through, for example, launching startups or becoming CEOs, is simply having a more or less good paying job. It's not like $1 million per year, but it might be, for somebody it's 20,000 per year, for somebody it's 100,000 per year, depending on the country in which you live. But through saving significant part of your income and investing over decades and just taking the magic of the compounding interest do their job. And this is how you really become affluent over years and have a fortune until you retire.
Of course, this is your what you are saying right now, and all the session that you refer to is a key point of discussion here, because what we understood here in TFLOW was that the biggest investors seek security, long-term investments with a viable percentage of return of profits per year. If you go out and tell them, listen, you get 40%, 50% per year, no one serious investor will come and deposit their money into your products. So this is important. This is why we chose to work with you, because we understood that this is the key point for the success of our own project, because we want to go out and attract these large investors which are going to place their money within the platform ecosystem, for our joint ecosystems actually, and invest in such projects, because these are the people with the bigger wallets. These are the people who know how to invest, and this is the strategy to invest in any project. Have long-term secure returns of a good percentage, because if you add and multiply this percentage year by year, this is how you grow your wealth. Is keep your wealth and grow it step by step. If you go for a short-term quick profit, you won't get it 95% out of 100, especially in crypto. So the way to offer a complete stabilize an investment ecosystem is to able to offer, from one side, what we offer is our expertise is spot trading in crypto, but when there is a bear market, like now we are experiencing 3 months of a bad market right now, where you can place your money. Money cannot stay still. So you have to place it in an investment pool, as we call it, in a security token offering, as you call it. So this is the connection here. And the only way to actually attract large amount of capitals is to offer investment pools in secure projects, in good markets, and offer this way out to your investors. And this is way, and by this way, you create holders of the security token offerings and holders of your own coin in order to have success in a project. Boris, let me ask you, what are the type of security token offerings that the company can issue? We have prior discussed about revenue share tokens, debt tokens, and can you share a little more details about the security token offer models?
Sure. So the big benefit of security token offering is a very high flexibility of what you can put into the token. So token is simply the technical embodiment of the investment contract. And the terms of this investment contract, which you describe in your legal documents, can be any. So you can provide only the revenue sharing with your investors. Another opportunity is to provide, and this is what many of our clients do, it's very common to provide an equity participation. So basically to provide fractional ownership in your company or your assets, which this is a strategy that many of our clients utilize because it provides higher returns to investors, because you benefit not only from the cash flows from dividends, investors also benefit from capital appreciation. That is underlying the growth in value of the assets or the company. Another possibility that some of our clients utilize is the debt offering. So in the case of they're investing in relatively stable assets, and they will be able to provide the cash back to investors, and they don't want to have the investors for a long term because, for example, their project has a limited timeline. So what they do, they provide investors with stable cash income every year, which can be up to 10%. And then they give money back at a face value. And again, there are different models of how the bonds can be implemented. For example, one of our clients, they changed their model later to provide high returns, but their initial idea was to offer the so-called callable bond, which allows them to actually pay back the debt sooner than they intended, in the case if they execute their property construction more efficiently. So this is one idea they had. Another variation on the bond is the so-called zero coupon bond. So in the case if you have thousands of investors and your investors are more traditional fiat investors, it may be actually a bit complex to do a dividend payment manually each time, because if you would do the payment in crypto, it's very easy to pay dividends to investors. You simply utilize a multi-sender contract. But if you do it via wire transfer, via bank system, it doesn't have such strong integrations yet.
It doesn't.
And paying every quarter returns to thousands of investors can become a nightmare also in terms of the costs, because often token projects are relatively risky, and therefore banks charge high fees for transactions. So what they do it in such a way that return is not paid to investors automatically. Instead, it is added to the value of the token. And when you redeem the token, you take the face value of the token and the returns that have accrued on this token. So there are many possible interesting variations. There are also hybrid securities between debt and equity. For example, some of our clients are offering convertible bonds. That is bonds that bonds that in certain time, for example, in 3 years, you can either as an investor take your money back and redeem those bonds, or you can convert them into equity and become fractional co-owners. This is especially beneficial for projects that don't have their project constructed yet. So, for example, this is actually the project that I mentioned previously with resort in France. That is project called Willows. So Willows Resort. Given that currently they have only land and there isn't anything built yet, and therefore becoming fractional owners is a bit high risk for investors. So what they say, currently they offer you bonds, and in 3 years you can either take your money back if you're not happy with what they built, or if you're happy with what they built and you want to become a co-owner, you convert your debt token into equity token and become fractional co-owner of this resort. So it basically is a win-win situation for investors. If you're not happy, you at least not lost your money and received 8% annual income. If you are not happy, if you are happy, then you become equity owner. And this is the kind of different models that you can implement with security tokens. Actually, each time clients come to us, we learn a new model that can be implemented. Yes. Another client of us, who is they're tokenizing teak plantations in Ghana, they want to provide, they're not sure yet, they either will provide existing investors or will tokenize separately carbon credits, because a new topic that is becoming extremely hot currently is environmental topic and the receiving carbon credits for reduction of carbon emissions. These carbon credits are actually quite valuable, and the investment in replanting of trees, for example, and by the value of carbon credits received can provide a huge return, up to 100% return on investment capital in something like simply the replantment of trees. So it actually can be extremely profitable. And this is one of the, the way in which the protocols, the carbon credit protocols work is that the investment in a reduction of carbon emissions makes you eligible for receiving carbon credits. Yes. So actually, we are not sure in that yet, but based on the preliminary research, it can be the case that investors themselves will award the carbon credit for that investment, which means that your return is extremely increased from this mere investment. So actually, there are, depending on what you're doing, you can do something very simple and very straightforward to something quite complex and sophisticated. And actually, usually we advise clients to keep it simple, because especially if you're going to small investors, it is true that if your investor is a pension fund investing $1 million, they probably will take some time to do due diligence and understand your model. But if your investor is putting $200, and this is like, and this is only one of the 10 investments they do, they're not going to really dive deep into the model. So you need to keep your communication and model as simple as possible. But if you would like, you can obviously do the quite sophisticated and interesting model if you would like it.
That is excellent. You know, environmental tokens is the way to go, I think, because right now saving the planet and making the planet greener and inventing green technologies and being able to invest in the planet's recovery, let's say, it's the way to go, because governments are going this way, the G20 are going this way. So it is important to follow the lead, let's say, of the politics, and see that where the economy is going to go and where the credits and the funding from the government funding is going to go. It's going to go at such projects. This is excellent what you mentioned. Boris, let me ask you, how many funds have been raised through security token offerings through your advisory or your platform so far?
Overall, there haven't been many clients who launched yet. So we started. How would it work? We spent initial 2 years on really understanding our customers and building the model of how security token should be really conducted. Therefore, we spent first 2 years on building this robust security token model, and we started really investing in sales and marketing only a year ago. So most of our clients actually have been signed starting from September and August 2021, after we have shown the proof of concept. And therefore, the first customers launched only in December and January. For example, one of the customers launched only 2 weeks ago. So overall, currently our customers, in terms of the capital that have actually been raised only a few $100,000. If you are speaking, however, about the fundraising targets of our clients, so the collective value that they want to raise, and already the interest they have from investors, so the collective value of that is a few $100 million in terms of the amount of deals that we have in the pipeline and that will be launched and offered to investors.
To achieve such an amount, and it's amazing, because it's not an easy industry and it's not an easy process, because firstly, the client must understand the model that you are going to create for them, and then the investors have to understand the model. But it's a way to go for now, for the present and for the future. This is why we're very proud to work closely with you on this. And this is why we want to implement the same method within our investment ecosystem. So we are able to offer firstly to the businesses that we know, because my background was always on B2B businesses and exports and big companies that what wish to expand. Me as well, you know, when I started my career, I was not into crypto. Crypto was my hobby. You know, in 2020, I was awarded as a top business strategist in Europe. But then I left everything around the B2B platforms that I have created to step into crypto and found TFLOW and go further, because I also believe that blockchain is a way to go for the economy, for the world, and for the micro investors as well. So we are, I believe, in just the center of innovation right now. It's really amazing how your mind works. It's really unbelievable. You are practically doing physics in blockchain. You're creating new models, new forms of the value that can flow around projects. It's really amazing. Of course, we should also share with the audience that STOBOX is always available for anyone who wishes to tokenize a project, and they can contact you, either us or you directly. They can contact us actually, because we don't have a platform yet, but this is what we are going to build, and this is why it is a way to go to invest in TFLOW in our coin. And what you described practically is a glimpse of the future, the present and the future, and how the economy is going to work. And I'm very glad that we are going through this road together, and we are going to lead a lot of businesses to find a new way to get funding first, and secondly, we are going to help micro investors and investors get value more easily away from the banking system and from the financial traditional system that is currently their only option. This is really important. I would like to thank you very much for this interview. It was an enlightening interview, and as I told you, I admire how your mind works. And you know, a lot of people say this about me, but I must say that I admire you, because your mind works at a completely different level, and you are doing conception, which means that you are creating models from scratch, which is not a traditional financial advisor can do.
Thank you, John, for the warm words. It's really important to me, and I thank you for inviting me to for this interview. I really hope that it has been helpful, and it provided you a bit more insight on how tokenization works and where the financial industry, and not only financial, all industries who are tied to finance are moving. We've been really honored by the fact that in such a short time, so many large clients trusted us. It really shows the fact that there is a demand. The fact that they went to companies, and all tokenization companies have started only a few years ago, and the fact that people are going to these companies with large deals show that there is a demand and many companies want to implement this as a superior model.
This is
and it's very
both companies are going to grow. This is a way to go for all serious companies to raise funds through security token offerings, and for investors to be able to allocate their investment capital to multiple sectors and multiple technologies, because investing in one project is not the way to go.
Yes, actually, according to Ray Dalio, the real way to increase your risk-return ratio is diversification, but not a simple diversification. Is that diversification by investing in assets that are not correlated between each other. So the problem with investing, for example, only in public companies is that public markets are mostly correlated. So you have all companies rising and falling together if you're speaking about large-scale economic cycle. So the fact that tokenization enables investment in completely different sectors, in small and medium enterprises, into private equity, into assets such as real estate, land, or natural resources, enables this true diversification that makes your ratio of return to risk better, and therefore in the long term allows you to profit more. And this is now available for all investors.
You avoid the domino effect, because when you have a crisis in a specific sector, all sectors around this sector goes down as a domino effect, and one falls after the other. It happens when you have a global crisis. It was really amazing. Boris, I would like to thank you very much for attending this interview. It was really important for us because you shared valuable knowledge, and our audience could understand the value of the collaboration and why both companies are going to be successful, because of this change of the way value goes into and flows out of projects, and the way we democratize investing, and we actually going to help multiple investors invest in multiple projects with less risk and bigger profits. Thank you very much for today's interview, Boris.
Thank you for inviting me.